Most market commentators remain confused, flirting between being bearish or bullish, usually after the fact, after the market has risen or fallen. Take when I last looked at the Dow and the market was in a downtrend, eyeing an assault on Dow 25,000. At the time, the reasoning was surprise failure to resolve the US-China trade war for why stocks had fallen, all without understanding the underlying megatrend drivers that remain constant regardless of what Trump announces or tweaks or threatens, which are the trends towards war with China, climate change, the inflation megatrend, i.e. money printing, AI megatrend, and Africa's population explosion, amongst others that come to mind, all of which were in motion before Trump came to office and remain so for decades after Trump leaves office, with several added risks that are more likely than not, such as a global pandemic, even perhaps a limited nuclear war where even the detonation of 100 nukes could trigger a nuclear winter of sorts, though don't take that as a solution for climate change, as our finely balanced equilibrium could swing sharply in the other direction, let alone the consequences of radiating the planet. So letting off 100 nukes will be no solution to climate change. However, a simulated nuclear winter through controlled injection of particles into the stratosphere could be a possible solution to runaway climate change currently underway. Of course, the best solution would be to just suck out about 40% of the CO2 out of the atmosphere, which is probably the solution the world's major economies will settle on and implement once climate change starts to really bite. So should prove to be a good stock sector to start looking into investing ahead of the curve that I will take a close look at in future analysis. Last Thursday saw the Dow close at a new all-time high of 27,088. Remember folks, this bull market began in March 2009, that's over 10 years ago. But no one's asking the question of why are we experiencing the longest running bull market in history. Anyway, the latest bull market setting milestone reason was that the Fed is going to start lowering US interest rates this month. However, if you understand the megatrends, then you know that's just what's on the surface and not the primary driver for the mother of all stocks bull markets that I concluded over 5 years ago could run for literally decades to come. Yes, we will have corrections and technical bear markets, i.e. 20% drops, but all of these will just amount to buying opportunities, which is why as an investor, one's number one task is to have a good list of stocks to accumulate whenever the opportunity presents itself. In this respect, I provided my patrons with an updated list of stocks in the key megatrend stocks driver of our age, artificial intelligence, at the start of April 2009 and subsequently on this YouTube channel. And so there was no excuse not to take the buying opportunity presented as the stocks traded at a discount, as I suggested in my May 10th analysis, with even more AI subsector stocks to add to one's list in my recent analysis on investing to profit and benefit from human life extension AI stocks and technologies. So today's market focus is on the Fed giving signals of lowering US interest rates by at least 25 basis points and perhaps as much as 50 this year, starting with a quarter point cut this month to take the Fed funds target range to 2% to 2.25%. So why move to cut interest rates now? Well, pushing short-term interest rates down will have the effect of reversing the dreaded recessionary bond market signal of an inverted yield curve that the US has been in since late June, i.e. the 10-year minus the 3-month. So cutting US interest rates by 0.5% should end the inversion and lessen the risks of a recession during election year. Stock market trend forecast 2019. My in-depth analysis of 1st of March 2019 concluded in the trend forecast for the Dow to achieve at least 28,000 by mid-September 2019. At my update of 7th of April, the stock market was running ahead of the forecast by some 700 points, when I warned to expect the stock market to converge towards my trend forecast rather than continue to trend higher. And by my last update of 10th of May, the stock market was taking a tumble, which the mainstream media attributed to Trump trade war chaos based on the preceding consensus view that the trade war would soon be resolved. Instead, the opposite happened to widespread expectations. Whatever the actual cause and effect, I have long seen a full spectrum war with China's inevitable megatrend that I have covered at length over the years. The stock market saw sell in May and go away, kicking a couple of weeks earlier than I originally anticipated. At the time, I concluded to expect the stock market to resolve to meet the forecast trend trajectory, i.e. the red line, by mid-June, and then embark on a trend towards a new all-time highs, and thus to take the stock market weakness as an opportunity to accumulate AI megatrend stocks trading at a discount. Which brings us to the present. And the rest of this analysis has first been made available to patrons who support my work. So for first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And also remember to subscribe to this YouTube channel for new videos.